Bitcoin is going through something of an identity crisis. A massive one, actually. The very thing that was designed to work outside of the traditional financial system is now being embraced, and you could even say co-opted, by its biggest players. It's this paradox that really gets to the heart of what Bitcoin is becoming. So let's get into it.
And this is really the central question for us today. I mean, think about it. The original cypherpunks, the early adopters, they saw Bitcoin as a revolution. But if you look now, the biggest buyers aren't the revolutionaries anymore. Nope. They're the very institutions the revolution was supposed to replace.
To really get what's happening, you have to go all the way back to the beginning. The title of Satoshi Nakamoto's white papers said it all. A peer-to-peer electronic cash system. That right there, that was the dream. The goal was actually pretty simple, but it was also incredibly profound. The idea was to create a way for any two people anywhere on the planet to send money directly to each other. No bank, no government, no credit card company, nobody needed to give their permission. Okay, so this slide really breaks it down for us. It's the core difference, right? On one side, you've got traditional finance, or TradFi, which is all about centralized entities like banks. And on the other side, you have the crypto ideal, which is, well, the complete opposite. It's all about getting rid of those middlemen and putting the power back into the hands of the individual. And this right here shows you the nuts and bolts of that shift. The original crypto way of thinking was all about self-custody, the idea that you, and only you, hold your own Bitcoin. Now don't get me wrong, that's still the majority of the supply. But Wall Street's model is completely different. It's third-party custody, where they hold the assets for you in things like ETFs. And that slice of the pie, it has grown into a massive part of the network. It's a whole different world from that original vision. So that brings us to the next chapter here. Wall Street didn't just show up to the party. They arrived with, overwhelming force. It's creating what some people are now calling the great institutional enclosure. This is such a powerful way to think about it. What's happening right now is basically Bitcoin's unofficial IPO. You've got the early insiders, the original miners, the whales, and they're cashing out. They're selling to a brand new class of long-term institutional holders. What we're witnessing is a massive, structural transfer of wealth. And the scale of this, it's just staggering. We're talking over $175 billion of institutional capital that is poured into these regulated crypto products all around the world. This is not some small experiment anymore. This is a systemic shift. And to put a finer point on it, just look at one product from one company, BlackRock's Bitcoin ETF. It alone holds around $67 billion worth of Bitcoin. That makes it one of the fastest growing ETFs in the entire history of finance. Just, wow. And you can see the impact right here on this chart. The tan line, that's Bitcoin's price. The black line, which kicks off in early 2024, that's the amount of Bitcoin being vacuumed up by these new US spot ETFs. It's so clear how that relentless constant buying from institutions created this structural demand that just pushed the price to all new highs. And it goes beyond just the ETFs. Publicly traded companies are now holding over 1.3 million Bitcoin right on their balance sheets. That's a 21 times increase since just 2020. It's turned Bitcoin into a legitimate, mainstream corporate treasury asset. So yeah, these are the new whales. You've got the giants like BlackRock and Fidelity, you have aggressive corporate buyers like Strategy, and you even have the Harvard University Endowment. These aren't speculators, these are patient, long-term fiduciaries, and believe me, they now have a major say in how this market moves. Okay, so what does all of this mean for Bitcoin's founding principle? Decentralization. Well, it looks like a completely new model of control is starting to take shape. And this quote, this really hits the nail on the head. The era when the individual hobbyist or the small retail investor was driving the market, that's pretty much over. Control has been professionalized. This chart breaks it all down, showing exactly where that control now sits. Institutions, through ETFs and their corporate treasuries, now hold a mind-boggling 12.5% of the total supply. Then you add in governments, holding around 2.3%. That's nearly 15% of all Bitcoin held by large centralized players. That is a huge, huge shift from its individualist roots. And here it is. This is the great paradox we've been talking about. The actual Bitcoin code, the protocol itself, that's still decentralized. Nobody can just come in and change the 21 million supply cap. But the power to actually move the market, to provide the liquidity, and to set the price, that power is now becoming more and more concentrated in the hands of just a few financial giants. So, Is this the end of Bitcoin as we know it? Or is it maybe just the beginning of a totally new phase? The evidence really suggests that Bitcoin is maturing into something way bigger than anyone could have originally imagined.
This S-curve of adoption really puts it all into perspective. It's a classic pattern you see with any new transformative technology. And you can see how Bitcoin's current phase of adoption, it looks a lot like the internet back in the early 1990s. The arrival of these huge institutions isn't the end. It's the catalyst needed to push Bitcoin up that curve toward true mass scale.
Ultimately, what Wall Street's entry has done is transformed Bitcoin from this volatile kind of niche experiment into a durable, global asset. All of this institutional demand has created what's essentially a structural floor for its value, making it a permanent part of the global financial landscape.
So we're left with this final question. Bitcoin has absolutely achieved a level of legitimacy and stability that its early supporters could have only dreamed of. But to get there, it had to partner up with the very system it was originally built to disrupt. So you have to ask yourself, what was gained and what was lost?